Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq Market Site is Sherry Marcus, Director of Generative AI at AWS, Rob Norris, Vice President of Product Management and Strategy at Nasdaq Verafin, and Tony Sio, Head of Regulatory Strategy and Innovation at Nasdaq Financial Technology, to discuss leveraging AI technology to fight financial crime. It is great to have everyone with us. Of course, Rob joining us remotely. And we have quite a lot to unpack here, Tony. I'm going to kick this off with you. Let's talk about higher level trends within the industry. And then Rob, of course, if you can follow up on Tony's points.
Okay, so we've all had a huge burst and discussion about AI, Gen AI being kind of the precursor, we're kind of pushing it out into the mindset of the kind of the average person out there. And kind of lately we've seen kind of slightly reactionary, but a lot more kind of regulatory discussion about a potential impact of AI. Right, a good example is the CFTC, Technical Advisory Committee, recently put out some kind of thoughts and guidances on AI as kind of risk and usages out there. And there's been a lot of kind of discussion in terms of like different kind of companies out there using AI tools, Gen AI tools in kind of quite a variety of different ways. Right, and kind of maybe Rob and Sherry can probably talk about a few of that.
Yes, so Rob, if you don't mind following up on that, and then Sherry, I want to ask you a question as well as it relates to Gen AI, because it feels like it just came out of nowhere now that it's part of the consumer vernacular. Yes. But Rob, let's get your thoughts on that.
Yeah, sure. So, I mean, from the point of view of Nasdaq Verafin, we're a solutions provider to help financial institutions fight crime, whether it be fraud or money laundering. And in terms of the banking industry, if you look back at 2023, in terms of the trend, back then, there was a lot of talk about generative AI in an exploration but in 2024, that's given way much more to practical adoption and how that can be leveraged in actual day-to-day use cases in the actual business as usual workflows in the bank. So what we're actually seeing is kind of the movement from conceptual discussions to actual real life use cases.
Right.
In 2020.
So Sherry, let's expand on that some more, because AI is nothing new to a company like AWS or anyone else in financial services. Why do you think is it just because it became part of the consumer day-to-day that we know what Gen AI is?
Well, Gen AI exploded in 2022 for three reasons. One, it was the invention of the transformer technology, which is an ability to parallelize a lot of computations. The second reason is all of this data that we have, including data from the financial services. And the third is just the large availability of cloud compute. And it was these three things together, that really just caused the explosion of Gen AI.
Yeah. And Tony?
Yeah, I was going to say, I totally agree. And it's kind of like almost kind of building upon itself now. Right, I've noticed, and kind of Rob was talking about how we're kind of moving beyond that conceptual phase. Yes. We're kind of seeing products going live. We're seeing what works. Kind of we're getting a better realization of what doesn't work as well. Right, and then also I've noticed kind of on the projects that we've been working on Nasdaq, right, compared to kind of like with the increased adoption of kind of these Gen AI tools and usage, the infrastructure of further people using it is actually better as well. So a great example of this is whilst previously with our project, we had to kind of build a lot of bespoke kind of testing tools. Right. Kind of working with AWS, right, we've been able to use kind of off-the-shelf AI testing tools rather than building our own bespoke ones, which kind of hugely kind of speeds up kind of productization.
Yeah, well, let's talk more about that. Nasdaq and Nasdaq Verafin, you've both recently launched Gen AI capabilities in surveillance and anti-money laundering, or fraud detection products and platforms that was built on AWS Bedrock and AWS services. Give us some background on that.
Yeah, so we had a look at the problem. So one of the fundamental problems that we have, and we provide tools that detect kind of like market abuse and bad behavior, is that there's a lot of kind of work to investigate and find the context, right? There's a lot of information inside corporate filings, kind of deep buried in, and analysts need to kind of dig through kind of a fairly kind of broad range of information from corporate filings to news and such, and gather it all together. And we thought that would be a great use case for Gen AI. Right, and we work actually very closely with AWS kind of to bring that forward.
Right, and Rob, if you could give us some more detail on the new product that has launched for surveillance and anti-money laundering.
Sure, so I mean, last quarter, Nasdaq Verafin officially launched our first generative AI feature. We call it our entity research CoPilot. And in a somewhat similar vein to what Tony just mentioned, it is intended to be an efficiency gain for the actual fraud or anti-money laundering investigators that work within a bank. So similar to Tony, we built this upon AWS Bedrock for our customers. And I think it's important to say, in terms of usage or application of AI, choosing the model is sort of one of the steps, but also bringing in the right data into that model, as well as successfully integrating it in a way that can be adopted for the mainstream, is sort of what the key. All of those things coming together to actually make this a successful adoption within a financial institution. So we specialize in bringing that domain and the technology together, integrating it into an existing workflow, and we're really excited by the adoption that our customers have taken up with this to date.
And Sherry, can you tell us about some of the foundational aspects of Bedrock?
Yes, AWS Bedrock is built on three key principles. One is model choice. We believe customers should be able to choose from one amongst many large language models. The second is security. So AWS Bedrock, which is our generative AI application service, is built upon the strong infrastructure of both secure and safe of AWS. And lastly, we bring world-class tools such as retrieval augmented generation and agents. That is an entire ecosystem across these models that allow us to deliver these applications for Nasdaq. I do want to mention one thing just to riff off of Tony. What I'm seeing is customers are asking for smaller models, that are purpose-driven, and the models are driving the application, which across with an ecosystem of agents and other tooling, and this has a lot of cost benefits for our customers.
I think that's a great point that you bring up, because sometimes when you're leveraging new technologies and everyone wants to be first to go to the market, you want to make sure that you're providing a solution for a problem that a client has identified. Not simply just saying, okay, this is part of our tech stack now, but we are looking to solve a specific problem.
Correct.
Yeah.
And at AWS and Bedrock, we work backwards from our customers' problems. So as with Nasdaq and Tony, we worked with trying to understand how to solve this surveillance problem with his data. And then we figured out what models and then how the application should get built around to solve that problem.
So Tony, let's talk about some use cases here so we can conceptualize this a bit. Are you seeing an improvement in any area where these technologies are being deployed?
So we've used it kind of in our first release specifically around the investigation process. Mm-hmm. So we provide tools that find bad behavior, and then we were thinking kind of what is the most appropriate use case, and it really was around that, supporting that collation of broad information and data, right? And whilst I'm talking, I kind of want to riff upon a point kind of that kind of Sherry and Rob said, which is around the context being the key and having it kind of built purpose of the problem, right? And the context that we have is that like we're working in this incredibly kind of regulated environment, and particularly kind of for Rob and I, where we're basically using to detect potential fraud and market abuse, which is kind of even more so. So the standards for us is actually quite high, right? And regulators have been discussing the kind of the standards around AI models and AI use a fair bit. So when we were building this, we were, as Sherry was saying, thinking of the problem, right? But we also had to think about the context of how our application will be used, which is in this kind of broader regulatory environment, right? And we had these additional guardrails around, and I think the regulators have kind of been discussing the same things lately, so really around the fairness, data robustness, transparency, explainability, and kind of like data privacy, and really had to consider these kind of facets, right, which the regulators been talking about when we were putting the product together, right? And an additional one that has been discussed more and more so is around kind of like the accountability, right? As we were designing the tool, we had to think about the accountability aspect, not just what was possible, but kind of like how it would fit in the context of an actual kind of like compliance program.
Right, right. So and that's a great point that you bring up. And Rob, if you can follow on to that, I mean, security, of course, is another consideration that you have to take into as you're looking to build these models out.
Yeah, absolutely. And I would say, you know, if you ask that question around some of those challenges several quarters back, it was probably a little bit of a different story than it is today, especially in the banking industry. There was a lot of concern about, you know, AI policy and model risk management around exactly, you know, what is the actual use case of the AI and how does it work. But a lot of work actually has gone into transparency and explainability from a data governance point of view, from a you know, model appropriateness review. And I think it's a very manageable and solvable process to the point where we're seeing adoption. Banks are gaining you know, access to some of these AI use cases for very bespoke use cases. So I think the next challenge really is just appropriate execution and making sure that the efficiency and effectiveness gains from generative AI is realized, as opposed to, you know, the question of will it be used.
Yeah, and
So
actually, Rob, I'll probably throw some stats out there. I think for both our use cases, we were both looking at about 30% kind of efficiency gains.
Yeah.
So quite significant.
Right. I mean, that is quite significant. At the end of the day, you're going to have to be able to explain this to senior leadership in the board, how these significant investments are showing quantifiable returns in terms of improving efficiency, and then, of course, you know, improving the outcomes of what it's designed to do and catch the bad actors. Right. So.
Yes. One other point that Rob made I wanted to add is another security aspect of dealing with large language models in Gen AI is that data could be used to augment the model vendor if you're not careful. So at AWS, when a customer trains their model or fine-tunes their model, it stays within a model that resides within their account and doesn't go out anywhere from other than that model.
And I'm glad you brought that up because that is an interesting question. I mean, as the tech stack continues to expand and there's a number of vendors and other third, fourth party parties involved there, you know, it kind of opens up the exposure a bit as well.
Well, at least within the AWS infrastructure, everything stays within the customer's account, you know, on AWS, and there is, and the model and the ecosystem and the data resides within there.
Right. So that removes one of the challenges
Correct.
of having that kind of exposure.
Correct.
Right. So when we think about outlook, Sherry, going forward, how do you see this continuing to evolve? Are we at the very early stages of what's possible with leveraging these type of technologies?
Yes, I think we're really at the beginning. You know, what I'm seeing in the financial markets are a rush to efficiencies, right? As we've seen here in you know, this use case with Nasdaq, and just trying to accelerate a lot of the work that's done by hand, okay, almost by. But where I think it's going is certainly in alpha generation. Even given regulatory industry, we have customers such as Bridgewater, where we were able to have analysts ask natural language questions about macroeconomic events and then get back results, or I should say macroeconomic hypotheses, and then get back validations or counterexamples. And this allows them to accelerate their investment theses and therefore generate much more hypotheses than they could. So that's a potential direction that we're seeing with Gen AI.
Right, and Tony, when you think about integrating these newer technologies with legacy systems, or is your team advising on that as well with your clients and customers?
I think it's all about the integration, right? I think it's, you've got to, it's not going to be as useful or as powerful as a standalone, right? You've got to look at it in the context of your existing processes, right, and how they flow. And one of the things we are considering, and this is, I think, the interesting kind of next thing is, like, after you've introduced these kind of new potential tools and capabilities, how would your processes change? Then does that create new opportunities? So one of the things that we're thinking about is, like, as we introduce these new tools which improve the efficiency, like, it gives the analyst capabilities to look at a broader range of things.
Yes.
Should they now be looking at using these tools even further in these kind of new ways that they didn't have time or capabilities before, right? So that's kind of the kind of like one thing leads to another.
I think that use case could be argued for virtually any industry. Now that you're taking, you're improving on operational efficiency, you have the time to think about more complex ideas and think about new products, new ways to protect the ecosystems. But Tony, I have a question, and Rob, perhaps you can follow up on this as well when it comes to surveillance. What's the difference when you're implementing Gen AI or one of these newer technologies in a regulated versus an unregulated environment? Does that change the calculus?
I think it changes the calculus quite significantly. I think there are, the finance is not the only regulated environment out there. There are a lot, but I think we will have to admit it's one of the most highly regulated industries out there, right? So we had to consider a lot of these kind of guardrails that I mentioned earlier. And also, I think it also informed our choice of the efficiency play prior to kind of other approaches to AI. Like by working with the efficiency play first, it kind of helps us familiarize in terms of the best approach in getting these things out there, getting them to market, but also helps familiarize the regulators and these kind of regulated industries in their usage, right? So they become more familiar, more comfortable in kind of using these types of tools.
Yeah, and Rob, will ask you the same question as well based on what Tony just said. It sounds as if this type of technology can be applied outside of financial services as well. I mean, surveillance is surveillance. I mean, you're looking to catch bad actors across all industries.
Yeah, so I mean, the fun thing about the anti-financial crime space is that generative AI is sort of the latest chapter in a long history of other AI technologies. So there already is a lot of the groundwork for model risk management and model risk governance in place that needs to adapt and evolve for generative AI. But that already is a relatively mature process within the banking industry. It just kind of needs to follow the forms. I always like to use the example that criminals are already starting to use the most sophisticated technologies in executing scams and frauds, and the industry needs to stay ahead of those criminals. Like criminals are not really too worried about model risk governance, or if they're using the models appropriately, they'll use them. So the industry needs to stay ahead of the criminals to actually prevent losses to customers, to individuals, to businesses, and to the banks.
Yeah, well, I mean, Rob, it's almost a double-edged sword, right? The same technology that we're deploying, whether it's cybersecurity, financial services, that bad actors are using as well, right? So you might be using the same type of product to try and drive opposite outcomes.
Exactly, you got it. So I mean, the appetite is there. We're seeing a lot of adoption. We're already seeing responses to our first version of our generative AI feature into other workflows where that same or similar features. There's already demand to actually expand it to other use cases. So I think speaking of the trend, we're on that track for expansion.
Yeah, well, certainly there's a lot out there that we need to surveil and keep track of. And thanks for all the great work that you guys are doing, keeping us safe. And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.